Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, welcome to the May 3rd edition of Basis Loaded with Joe Schmit. I am Joe Schmit, joined as always by Paige Driscoll. And thanks for joining us while we break down the latest NDPSR reports, starting with butter. This butter number coming in at 240.47 represents a plus 2 to the CME 1-week average of 238.40. And that's with 16 loads traded last week on the CME. See a little bit of a bump in volume here on the NDPSR report, coming in a smidge over our 3.5 million pounds. But for the most part, plus 2 is our expected basis for butter, coming in right in line and a little bit over on volume. All in all, I'd have to say that butter number is as expected. Moving on to cheese, this block number, 185.71. That represents a plus 6 to the CME 1-week average of 179.90. So plus 6 is about 3 times our expected basis, and that's with 21 loads traded at the CME. We did contract that basis a little bit. The CME traded down 1.5, while here on the NDPSR we lost almost 5 cents. So basis moving closer to normal, but still plus 6 is outsized basis for the block. In the barrel, 163.48. That represents a plus 8 to the CME 2-week average of 155.12. Massive volume traded on the CME last week in barrels, 42 loads, call it 1.7 million pounds. We're seeing a little bit of a bump in volume here on the NDPSR. We would expect 13.5 million. The volume on the NDPSR north of 15 million. And you'll notice with all the volume that we're seeing on the CME, we have outsized NDPSR volume going back for 5 weeks. So the sales at the CME are translating to sales on the NDPSR. However, you would assume that the sales on the CME were reported minus freight. And even with all that weight trading on the exchange at a discount, we still have plus 8 positive basis. So on a week where the CME is down 8, we were able to move the NDPSR down 10.5. So changes at the CME are translating a little bit quicker than you would expect to the NDPSR. However, here at plus 8, still outsized basis for the barrel. We would expect that basis to narrow as prices at the CME have begun to consolidate. And then I think next up is the real story on this report, whey, 42.63, which represents a plus 6 to the CME 1-week average of 36.75. Now, that's not the real story. The real story is last week's revision. If you look at this April 22nd NDPSR number, 42.93 is a substantial revision from the original release of 46.13. And you'll remember last week I started using my new system for guessing what the NDPSR whey price will be using a combination of prior week's NDPSR with the addition of all the sales that we had at the CME minus freight. And now using that new system, last week, I missed by 3 cents. This week, 3-cent revision. So looks like somebody forgot to include the sales at the CME in last week's NDPSR report. This week, if you want to use the prior week's NDPSR, we're talking about the April 15th number of 44.81. So I'm cheating a little bit here as I know what that volume is. But if you use 5 million pounds at last week's NDPSR plus 1, and then you add the 1.7 million pounds that we traded at the CME at 32 cents, you come up with a weighted average weight price of 42.45, which is pretty close to the 42.63 that was the actual release. So things are a little bit clearer in the way world in terms of the relationship between the CME and the NDPSR going forward, I think that's a pretty good plan for predicting NDPSR way. As I said, the volume in way outsized, as you would expect, with 1.7 million pounds trading on the CME. This 6.682, almost 6.7 million, is well above our expected 4.5 million pounds if the sales volume was based on forward contracts alone. And then that's not where the surprises end, because non-fat 112.19, that's a -2 to the CME 1 week average of 114.10. Only 2 loads traded at the CME, but as we all know, in non-fat, when the manufacturer needs to unload a lot of excess product to become current, the CME is not the venue that they choose, but rather the export market. So this 54.458 million pounds is a little bit above our expected 20 million pound volume. We thought the April 1st NDPSR volume of 40 million was something. 55 million is a shot above that. So that would be a new weekly high in sales. And all those bulk sales, which presumably were shipped out of the country, really did a lot to pull that NDPSR price down to 112.19. So this is week 404, the final week for the April pricing cycle. Those of us in the business of predicting the expirations missed by a dime, because April class 3 futures went off at 1862. The final is 1852. So missed it by a dime with all the math in. And really, if you assume that penny in weigh is 6 cents in class 3, if you have a 3-cent revision on 2 weeks, that's net a 1.5-cent revision over the course of all 4 weeks, or the average price. And of course, 6 times 1.5 is 9 cents. So that's pretty close. That accounts for all of the 10-cent miss that the futures market had in the April expiration. And April class 4 ends up going off at 17.95. So you have pretty close to a typical, call it a 57-cent class 3 over class 4 normal relationship. Again, that's where the normality ends, because if you carry current CME equivalents out through the remainder of the 4-week May pricing cycle, currently getting a May class 3 of 16.56 and a May class 4 of 17.80, so almost a $1 inversion in the class 3, class 4 spread if everything holds at the CME. Still have some pricing to do. We'll see what they have in store for us in the weeks to come. On behalf of Paige and the entire EverEgg Insights team, I am Joe. Thanks so much for joining us. Bye-bye.